Hi everyone, welcome to episode 83 of the Startup Playbook Podcast. I'm your host, Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. If you've been following me for any length of time, you'll know how important communities have been in helping me grow my businesses, and so I'm really excited to have Lauren Capelin as my guest today. Lauren is the head of venture community at Reinventure, which is Westpac Bank's $50 million venture fund. And in this episode, we dive deep into communities, looking at everything from how to start and grow your community to how to measure the effectiveness and the health of your community groups as well. Hope you enjoyed this episode, and please don't forget to like, share, and subscribe if you enjoy this video. Hi Lauren, welcome to the Startup Playbook Podcast, and thanks so much for taking the time to be on the show today.
It's a real pleasure. Looking forward to chatting.
Thanks. Sinking you in on your very brief trip to Melbourne. But for those people that may not be as familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Sure. I guess the kind of pivotal turning point for my story started about 7.5 years ago. I was working in Sydney within an internal communications role, but was doing some after-hours non-profit work for a youth-led organisation, and I happened to meet a woman named Rachel Botsman. And she was in the final stages of writing a book called What's Mine Is Yours, The Rise of Collaborative Consumption, which essentially, this is back in late 2009, charted the rise of what we now know as the sharing economy or the collaborative economy. Businesses like Airbnb, Uber, later on down the track, Lyft, which was at the time called Zimride, car sharing, all of these different businesses that essentially enable people to share and exchange their assets with each other using technology as that connection point. And so she was still finishing the writing of this book, but her vision of what the collaborative economy could be obviously completely inspired me at the time. And she asked if I would want to join with her and work to grow what she saw as a movement around these ideas. Of course, it didn't take much convincing, but I really couldn't have anticipated that time what the 5 years ahead really would look like for us. I remember being in San Francisco in late 2010, and we'd organised an event as part of Rachel's book tour at Hub Soma, so the San Francisco Hub franchise. And we had on the panel Brian Chesky, John Zimmer from Zimride, what was then called Zimride, now called Lyft, and Rob Garcia from Lending Club. And we managed to pull a crowd of, 30 people. And, that is astounding in itself because these entrepreneurs were so high caliber. But we also put the event on the night of the Giants World Series playoff in San Francisco, so it wasn't the best event planning. But really more, that's the point of the fact that still at that point, Airbnb was relatively unknown even in the Bay Area. And looking at the phenomenon that it has become today, we couldn't really have seen what was ahead of us there. So the role that I played there was really to connect with entrepreneurs like Brian, like John, and a host of other people, both in the US, in Australia, in Europe. South America was a huge market for these models, to connect with them, to help them use the frameworks that Rachel had created in her book, around what made collaborative economy businesses different, what kinds of efficiencies of scale they could have when people were actually using technology to connect in this particular way. So that was kind of the first phase of that journey, giving them something to, a common ground to work from. And that was useful for them to convince customers. It was actually pivotal in the boardrooms to convince investors after a certain point. Even Airbnb was using that shared narrative to get some of their initial traction. Of course, eventually the tide turned and Airbnb became the company that everyone was using to bring the ecosystem together. But our role then shifted to looking at the incumbents and trying to help them understand what was happening in the face of these sharing economy startups and how they needed to reinvent their business models to appeal to the consumer who no longer wanted the prepackaged offering. They wanted something bespoke. They wanted something that felt like a friend, all of those kinds of things. So we were looking at, hospitality industry, mobility in particular. The car manufacturers were fretting about what this would mean for car ownership with the rise of Uber, and I don't think we've seen the end of that particular story yet. So shifting into that role, we were trying to, paint the future of a more collaborative society. Along that same time, I started to see we'd been very close to the venture space as it related to the collaborative economy, mostly in the US. I don't think we ever saw the Australian market really focus on the sharing economy so much. But I started to see, this role emerging around community within venture capital firms, and at the same time looking at these businesses like Airbnb and seeing that community was actually at the core of those businesses. There was an entirely new business model that was centered around its community. So that was particularly fascinating to me. By the time I felt like, my work had been done on the collaborative economy side of things, I looked back to the Australian market. I was happy to be kind of grounded for a little while after spending so much time on a plane. And I could see what Reinventure Group was doing, both in relation to Fintech as a specific trend in technology that perhaps had a lot of opportunity in Australia, but also the community-centric nature of them as a venture capital firm, both because of that common thread of Fintech as well as the relationship with Westpac. And so I approached Simon and Danny and sort of suggested that a portfolio community might be a good idea to invest in sooner rather than later. At the time, there were 6 ventures in the portfolio. And kind of the rest is history as far as my role with them goes. We've now got 20 companies in the portfolio. The community gets stronger and stronger every day, and it's been a really juicy space to watch Fintech evolve over the last couple of years as well.
Yeah, absolutely. Obviously so many different components of your story that I want to dive into, but I guess one of the interesting kind of parts of that was, you mentioning that you ran an event where the founder of Airbnb is speaking and there's 30 people in the room, which obviously would not happen today. But, a big part of that is, every change has a beginning. Yeah. And especially, now everyone's very familiar with, the gig economy, with the sharing economy. But trying to put, looking at the future and how things will be can be very difficult to achieve. How do you, go to auto manufacturers or people that come from a more traditional or a different way of thinking and sell them on the future and get them to buy into that?
That's a great question. I think the interesting thing about the sharing economy, collaborative economy, compared to other trends that we see now, even Fintech is almost a bit different because it looks more threatening and scary. But I think the reason the sharing economy was so disruptive was because it was an automatic shift overnight. And it's so rare for a technology to actually enable that complete and utter shift. People just stopped staying in hotels. They were using Airbnb. People were outsourcing small tasks to TaskRabbits or Airtaskers in Australia, instead of doing that thing themselves, creating a whole new workforce. People who'd previously been underemployed or unemployed now had access to that kind of income, which was really interesting. And I think the impacts were so undeniable so quickly that it made it a pretty easy story to tell. They could see it on their bottom line. It wasn't just a creeping threat, which potentially you could say for Fintech because it's such a strong industry in Australia, financial services. So the compelling part of the story was that the numbers of people who were switching behaviours, but I think there was a bigger story to tell, which was really around the impacts and the efficiencies that could be gained by the incumbents by looking at these new business models. So looking at how to involve your consumers in service delivery actually reduces costs of overheads or actually enables you to scale faster than you could otherwise. Looking at the life cycle of the products you're developing and how you can close the loop on those things, or create seconds markets to create an entirely new income stream. There was a lot of good news story there as well. It was still definitely hard, and I think the chunkiest or meatiest industry that was being disrupted, probably aside from hotels, was the auto manufacturers. And if anyone had their heads in the sand, it was definitely coming from the likes of Detroit and really struggling with the idea that people definitely didn't want to own cars anymore. And in fact, young people weren't even getting licenses. The data was there, but the will to move, to turn the ship around was definitely harder to convince.
Yeah, absolutely. I think it's also just a kind of a more general point is I find startups often think there are so many different verticals or so many different areas that we can go to because obviously everyone will be affected by this shift happening. But again, I think kind of the approach of going, what are the industries or verticals that have the biggest pain point to begin with, and using that as a starting point versus going really wide and hoping that you're reaching things is a much better strategic approach for any business.
But even in this time, between 2010 and 2015 globally, like the frothiness of that that sharing economy sector. You know, you could, the Airbnb for this, that and the other, or the Uber for this, that and the other. Everyone had, you know, the musical instrument sharing marketplace, or the photography, you know, equipment marketplace. There was so many of these models being developed because each, you know, vertical did have merit in and of itself, but in terms of getting scale for the actual startup, that was a long road ahead. And I think we have seen the emergence of some pretty clear winners in a lot of those verticals, and it was the need to have rather than the nice to have businesses that really succeeded in that place as well.
Yeah, I was about to ask, so you mentioned that, you know, obviously the shift happened very, very quickly. First of all, you know, why, from your opinion, like why do you think that shift happened so quickly? And also, as you mentioned, there was just, and there still is, so much interest in developing kind of lookalike models. I guess what's the difference between something that goes on to be an Airbnb versus something that struggles to get there?
Yeah, I think as the adage goes, you know, the 3-year overnight success, even a company like Airbnb fits into that category. Like, they had a long road pre-traction, and a lot of those stories are folkloric now. At the time, you know, Brian didn't even mention some of those stories on the panel because it was all still very real. Like they had only just started to pick up the kind of traction that they knew would, you know, give them that hockey stick growth. I think the challenge, or the opportunity came when they could identify the thing that would move the needle most. And obviously with these businesses across the sharing economy, it was this idea of a community-based business. They couldn't run a business like a typical service provider because they actually had no control over the services being provided. That was the biggest distinction with these businesses, and the one that made them most peculiar to people in the existing industries. You know, how can that possibly work when you can't even ensure that the pillows will be fluffed in a particular way and all that sort of stuff? But what these companies did was start to empower their customer base in a way that gave them a sense of quality control. But they needed to do that in very delicate ways. And of course, over that period of time, there were a number of businesses that failed quite dramatically because they either took a too heavy-handed approach with the community, or, you know, were too laissez-faire, and in fact some things went majorly wrong. So it was a very big testing ground for all kinds of what's the balance with how we can essentially use the community to our benefit.
What does this is going to be a very general question, but like what does a successful community look like for a business or for a startup?
So I guess my understanding of community has become a lot more sophisticated since the early days of collaborative consumption. I think initially it was about, you know, holding events and having a bunch of people who really advocated for what you believed in, and everyone would come and have drinks and go home, and that was a community that was like really cool. But I think unless you have a lever for the growth of the company embedded in or baked into the community, there's actually a bit of a disconnect, and you could invest a lot of money building a community of people who love you but have no way to direct that enthusiasm to something that matters to you. So a successful community that I understand to be now, based on a lot of the work that I've done over the last couple of years, particularly with Reinventure and looking at some of the leading community management theories coming out of the US, it's what particular business objective does your community feed into, and what are the mechanisms or the methods that you can use to help the community take that action that's going to be most valuable for you. So to I guess break that down, if acquisition is the main driver of the business that the community can feed into, it's what kind of referral programs or loyalty-based systems are you implementing that help the customer or your community member understand where they can drive that growth for you and actually be rewarded for doing so as well. So it's a very mutually beneficial exchange. I think we've graduated from the days where community was actually social media broadcasts and, you know, tweeting back and forth to each other. That was a very early day kind of example of community. Now it's much more tactical.
Yeah, absolutely. I think, you know, we spoke about this a couple of weeks ago as well. You know, obviously I had the community role at Startup Victoria, and I think that the evolution of community is really, really important. A part of that as well. It's not necessarily just about doing a range of different events and getting people there. There's a lot more to it. So you mentioned, you know, a lot of building an effective community is really tying it to an objective.
Yes.
And I still see so many startups going, great, or businesses going, great, we need to build a community. Let's build a community. what should I guess what's the ideal process that a startup should do to strategize what that should look like and how they would go about implementing that?
Great question, and it is a really important part of the process. I think it still largely relates to where community sits within organizations. Within a startup kind of context, you've obviously got a lot of people, a small number of people doing a lot of work. It sits on their plate that they do X, Y, and Z. And community, rather than being sitting underneath a function like marketing or product, generally works best in those early days when it's spread across the entire, cross-functional. But I think what is most important is that a specific objective is chosen to start with. It's so easy to try to form a community that is everything to everyone. But I think, to your point before, I think it has evolved, but not everyone has actually caught up with that evolution. There is still a lot of understanding of community in this country, particularly in Australia, that it is around social media management and events and communications, where it can actually be a lot more targeted than that. So in terms of a process to go through, the most helpful resource in this that I find is coming out of CMX Hub in the US, and they have a number of models that they've used to actually create specific business objective related buckets around community. In particular, their space model is usually the easiest starting point, which looks at what that core purpose of your community is. Is it S for support? Is it P for product? Is it A for acquisition? Is it C for content? Or is it E for engagement? And once you know which one of those buckets your community best sits in, you can start to design a program around that. And each of those will have a very different and distinct objective as it relates to your bottom line or whatever your measurables are.
Again, as you mentioned, there are like so many different ways to create a community as well. Is there a way to, I guess, for any business that's looking to build that out for themselves, is there any approach that you would have in terms of finding out what the right approach or strategy should be? Should they be testing that? Is there a way to test that?
Yeah, I think it comes down to a lot of the processes that are baked into the lean startup model in terms of customer discovery. But even still, the community that your customers naturally want to build may not actually still be the right community for you to invest in, which seems a bit counterintuitive. But if your community is really focused on, they just love the idea that sits behind your product and they want to be put together in a space and to talk about it, that obviously increases the loyalty of your startup, of your customer base, but it may not be solving a problem you have in terms of, let's say, support, for example, where the support inquiries are at a volume that your internal team can't handle, and you have all these, customer advocates in your community without the tools to do something about it. So I think that's an example where it would be a shift of resources in the wrong direction to build features that help your customers talk to each other if you have a kind of downstream problem around support or product, for example. So you do have to do the customer discovery aspect to understand what they're motivated to contribute to. But it has to align with a business objective that you have. And it could be, a content community is a worthy business objective because you become a leader around a particular topic. A great example of a community that's more of a content community is something like Nike Plus. Mm-hmm. So they've actually built a community that at a high level is around running and fitness rather than, focusing on people purchasing shoes. The net benefit of that might be more sales, or it could just be that Nike's brand is well and truly associated with fitness, well-being, lifestyle. So they've made a huge investment in that, which, probably makes more sense than them focusing on customer support for like shoelaces or whatever it might be. In a tech product, obviously the support and product communities can add the most value. And a leading example of this in the field is Salesforce, Salesforce's community. It's called the MVP community. And what they have actually enabled their company to do is invest in this MVP community to the point that about 80% of all support inquiries are actually answered by the community first within 24 hours of those support requests being made. And after that point, Salesforce's actual customer support team can kick in. But that's a huge win in terms of where the resources are being spent internally.
So how clear does that objective need to be, and what, as a business grows, you have different challenges and different things.
Absolutely.
How does I guess a changing business needs change or reflect across their community? So should they be developing, I guess, different communities for different objectives, or different approaches to building that community with different objectives?
I think ultimately we always suggest that you start with the big rock on the horizon that's going to move the needle, but I think it's completely understandable that most startups will have a community of each kind. And I think you can also get deeper into that in terms of the types of customers that you're segmenting. And I think the key is that you don't see your entire customer base as your community. What this first step is about understanding who are the influencers or the most passionate people within your customer base that form your community. And that's where the investment is. There's some, similar models around, how many people within that larger customer base can you actually expect to be in your active community base. It's probably about 1% of your total customers. But if you can zero in on them and you start to build your community program around those needs, you'll start to bring more people into that core customer base. But certainly I think, if I think about my work with Reinventure, I see myself as having about 5 stakeholder communities that I'm actively managing. And despite my advice, I definitely started more than one of those at the one time. It's really just about the needs that they have and where your community program can actually meet those needs, but prioritizing your business objectives first and foremost in terms of who you're focused on. So for me at Reinventure, our portfolio community was 100% my first key focus in terms of creating infrastructure for them to connect and collaborate with each other, building value within that portfolio, which of course then has a flow-on effect, not just for the quality of the businesses, but also our reputation in the field as investors and the value that we add. Second to that, obviously our relationship with Westpac is really interesting and different as far as the venture capital landscape goes in Australia. Everyone has LPs, but they're usually quite a distributed group of people with varying objectives. We have one clear LP in Westpac, and our work to engage with them around what we're doing is really critical. There's obviously strategic relationships that are involved in that, but I'm focused on the engagement of the broader Westpac community, those members of staff who are actually engaged in what's happening in the startup community. So it has that kind of trickle-down effect. Outside of that, we're looking at the fintech community, how we can add value as a member of that community, and then the broader startup ecosystem in Australia as well.
Yeah. Really curious to know, so what, again, we've kind of spoken about this previously, but a big thing that often gets overlooked from an investor perspective is like the importance of building up that community to develop deal flow for VCs. Developing communities or community role is still very early and new in the VC space. So how do you see that evolving in the space, first of all, and what sort of value do you see in community being able to help both VCs and startups?
Yeah. It's definitely got a huge role here in Australia. I think I can almost talk about my colleagues in the VC space, including Blackbird. The investment they've made in community has been to create the startup ecosystem in a lot of ways with programs like StartMate. For Reinventure, what we've focused on with community and building pipeline by virtue of that is the fintech ecosystem by and large. So when Danny and Simon conceived of the idea for Reinventure, Stone and Chalk, the co-working space didn't exist. So while we don't necessarily always play in the grassroots startup space with incubators and accelerators. We've actually been looking at some more strategic plays around community that's actually going to naturally build pipeline. So being involved in the impetus for Stone and Chalk being created. Simon was obviously also the inaugural chair, and we actively supported the development of Fintech Australia, which was another really key item on the landscape to actually solidify fintech as a community in and of itself. And I think those things have reputational benefits, more to the point. I think other than that, it's really about our role actively, in that ecosystem, where it's, office hours type initiatives, which are pretty common these days as far as investment relationships go, but we try to add value a little bit up the chain in terms of some specific issues-based events, whether it's the National Payments Plan, the New Payments Plan, NPP, and how that actually is going to impact the startups within the fintech ecosystem and beyond. So trying to, increase the education around some of these key events that we're facing in the fintech ecosystem.
Yeah, absolutely. I mean, I think a big part of the community, and you just touched on this, was essentially it's a way for you to brand and position yourself with your target market.
Yeah.
In a way, and communicate with them in a way that offers them a whole heap of value. So for me personally, a lot of my businesses have been built off the back of community. Playbook Media has essentially come off the back of the podcast. We've been able to spend a year being able to get a lot of clients using people that kind of follow the show and follow me as a community that's kind of been built up to come in as clients of us and helped us to develop the business that way. But one of the big things that helped it for me was, I never started the podcast with a view to developing a community to start a business. Mm-hmm. And so that kind of gave me the room to develop that community over time to then be able to potentially use that in another way. It can be really hard for a business, especially if you're an early stage startup with limited resources and a need to kind of make things happen quickly, to I guess, have the bandwidth or the energy to kind of focus on building community, which can be a more longer term play as well. So, is there, I guess not a right or a wrong time, but is there a particular time or when should startups be thinking about really developing that community and thinking about that longer term play versus kind of focusing more on things that will get them more the shorter term objectives?
Yeah, there is definitely a sweet spot, but it's a moving target. And I think the most important thing is to have community baked into the DNA of the company, whether or not there's an active program around community running. I think having the mindset of community and understanding your role in an ecosystem is actually what's going to set you up for success. So I could say, even though I started at Reinventure about a year after the company had been formed or that the fund had been raised, community was definitely baked into the DNA of Reinventure. As I said, they'd already been involved in the development of Stone and Chalk. It was an easy sell that we should have a portfolio community. So if those things are in place, it's a very natural next step to building community programs. The challenge comes with the measurement of these programs and how to argue for the right kind of investment to make them a success. And that's where it becomes a bit of a moving target, because often it's easier to test in small ways earlier on, and use the things around the product development feedback cycles to start seeding early ideas of community, or be talking to every customer, which is what most early stage startups are doing, just to find out whether they've got their product market fit. But it's when it gets beyond that where there's some pretty key growth drivers that we're looking for, like hockey stick level trajectories, or moving into a new market and we need to seed with a completely different customer base than we have previously been using. That's when community kind of shifts front and center. But it really is an effort that involves product marketing. All of those C-suite roles across startups really should be informing or have a stake in what the community activities are. It's a very long game, as you said. So I think expecting community to prove its value in a short time frame is often a mistake that can result in community efforts being shortchanged from a budget perspective, or time and attention being moved away from them. But once you hit that lubricated community, then you really do see some pretty incredible results.
Yeah, absolutely. As I mentioned, I feel very fortunate to have not had any intention of using that community to do anything. So, I guess one of the things that often gets overlooked was, it took me 9 months of putting out weekly podcast episodes for that to lead to something, which then essentially forced me to start a business that I had no intention of starting at that time. But, I've seen people go the other way of, I've got a business, I need lead generation for my business, so I'm going to start a podcast, and they give up 3 months in.
Yeah.
And as you mentioned, like it's just a long-term game, and it's about consistency, and it's about kind of providing value to people.
Absolutely.
It can just be very hard to kind of see the other side of that as you're going through that process, because, as you said, very, very difficult to measure the impact of
that's
that.
right. But you'll get these small signals that you can start to listen to. Even with our portfolio community, like we've gone from 6 to 20, as I mentioned, in the last 2 and a bit years. And we created a Slack community, as soon as I started. That was one of my first orders of business of sorts. And I remember that it took about 6 months to reach what Slack calls that magic 2,000 message tipping point that starts to build a lubricated Slack community. And then within the next 3 months, we'd capped 10,000 messages. So that was my first weak signal that turned into a fairly strong proof point that this was important. Interestingly, with things like Slack, those messages all end up being 50% private or even more than that, because these bonds are actually being created directly one-to-one. But that is the intention of community, is to actually connect people with each other. It's not about your relationship as a business with your customer. It's their relationships with each other that make the most difference.
Absolutely. And as you said, once you find a community that kind of works, it can be a huge driver for growth or for engagement or whatever you kind of want it to be. But in isolation, especially when you're in the process of building that, it can't be your only solution.
That's right.
To particular things as well. So it's important to think that a community won't be your be all and end all for all problems that you have.
That's right.
And that it needs to be, if that's a kind of, you recognize that that's a more longer term strategy, you need to balance that with more shorter term things to be able to allow you to see the benefit of the long
Absolutely. You're recognizing its limitations as well as its opportunity. And the fact is that it's going to need hand-holding for a lot longer than might feel comfortable sometimes. These things take effort and manipulation to the point where you feel like you're forcing it until suddenly, things flick into gear and it's much more natural for everyone.
Absolutely. Yeah. So you mentioned, that there will be particular instances which will show you that you're on the right track.
Yeah.
For me, a lot of it was, immediately in terms of the download numbers. Yeah. So I think I've spoken previously about having tried to run businesses previously where everything just feels like I'm pushing something uphill and it's a struggle every day, versus something when it kind of works, it just takes off very quickly. How do you kind of, I guess, what are the nodes that you look for in an engaged community or being on the right track with what you're trying to do?
Yeah, depending, at a macro level, not talking specifically about my work, with each of those communities that I mentioned before as part of the space model, there's going to be a pretty obvious metric that should be attached to that particular pillar of community. So, in a content community, it's going to be the amount of, or the volume of contributions from your community. And that's really interesting in the case where the business is a content community. So one of our portfolio companies, Aura, is actually a crime prevention software platform that is rolled out in service stations and retailers across Australia and New Zealand. And it requires the employees of that retailer to log incidents of real-time crime. But the business is obviously, and then it links that to other reports as well as police databases, and correlating all that information can actually isolate and shut down crime rings and identify criminals and all that sort of stuff. But the engagement of the employees of their clients is what actually makes the difference, because they need contributions into what is essentially a content community. So that's one key driver that they're looking at all the time. And all of their communications goes into making that happen. Obviously, with an acquisition community, you're going to be looking at number of referrals or number of new customers off the back of community recommendations. Support, as I kind of hinted at before, with something like Salesforce, it's the number of inquiries that can be managed by the community, or the kind of, you could even look at overheads saved by having an outsourced community base answering support. Product feedback could be the difference between, tech debt and creating a feature that everyone loves. There's many ways to look at it, and I think your metrics refine over time. What might be good for this quarter is actually not going to highlight enough for the year-long kind of trajectory that you're on, but you can consistently revising, what matters most to the company. I think for me, with our portfolio, it's obviously, at a micro level that they can access each other to answer questions, and it's essentially a support community in that through that lens. But at a higher level, there's goals that we can actually be looking at commercial opportunities between our portfolio companies as well. So that requires a lot of trust to be built within the ecosystem, but also the right environment for those kinds of discussions to happen. So when we start to see those things, which we are, that's a really big proof point that's been 2.5 years in the making. So that's really exciting.
Yeah, absolutely. In terms of metrics, again, I think everyone recognizes the importance of collecting data and metrics. I don't know if everyone is as good as identifying what those right metrics are for themselves. So, taking social media, for example, so many times we see, clients or people that we're sort of just speaking to just tracking the wrong metrics for their own business as well. Are there are there specific metrics? And, I obviously mentioned that there's kind of different components, but are there sort of specific metrics that people should be tracking when it comes to community?
Yeah, I think ultimately the community health is the metric that matters the most, and that's really looking at the number of people in your community versus the number of people who are churning over time. So what does that community churn look like, or the active participation across your community? And the active participation is going to be measured by which of those business goals it's in. Like, how many support requests are they answering, how many pieces of content are they contributing, even looking at the level to which they're involved. How many active community members do I have versus how many passive community members versus how many are like 1 foot out the door. Keeping some of those metrics front and center at all times is your overall kind of like NPS for your community. It can be distracting to look at the granular, how many tweets am I getting? Like, those kinds of things really are social media and marketing at the end of the day. So your community health is going to be much more tangible, but it's also going to require you to actually have conversations with your community. It's one of those tricky things where real-time feedback is 100% going to be your best measure of success.
Absolutely. And our communities, should every startup be focusing on community, or are there specific industries or verticals or business models that communities are more effective or more important?
I'm a bit of an evangelist as far as community goes, and I'm yet to see, looking at our portfolio, there's probably 2 from 20 who don't really have a strong case for community, and that's for varying reasons. Sometimes the business to business models don't naturally lend themselves to community, and it may be more distracting than not. But even in those circumstances, there's enterprise and business level communities are potentially some of the most valuable ones that can be invested in.
Like Salesforce.
Exactly. It's a great example because it shows what's possible. And I think in this day and age where we are also connected with technology, there's so much leverage that can be, it's no longer weird to be collaborating in this way. So businesses are, the next ones down the line to have this kind of technology-led collaboration. And when it can meet their objectives as well. So with a business-to-business community, they're going to have probably business drivers on both sides as well. Sometimes you'll have, more of the feel-good factor still relating to business communities, but usually it's actually meeting a need on their side as well. So I think it would be hard to find a business where there's not an opportunity for community, but if it's not part of the DNA and part of the value set of the community, it can go terribly wrong. It's not to say that everyone is going to do it well.
So you mentioned CMX earlier.
Yes.
Aside from CMX, are there any other sort of resources, books, blogs that anyone who wants to, I guess, go dive deeper than just events and social on community that they should kind of look for more information? Yeah,
so in Australia, there's the Swarm Conference and the Community Managers Group that is actively working in this space. There's predominantly an online community emphasis in that community. It always sounds so self-reflexive. But I think that's more because that has been the predominant form in Australia. I think now we're heading into a space where offline and online community are in tandem and they work very well together. We're moving out of the social media realm that I mentioned. There's an organisation called Feverbee based out of the UK that does a lot of great research around what the impact of community can be, or some of those more research-led theories that actually support the case for community. And definitely, CMX for me has just made this practical and put some frameworks in place for what's otherwise been a very intuitive, stumble along, feel your own way kind of process. And I think that their training program is something that's particularly useful for people who are new in a role that's being called community, where they may have understood themselves to be marketing or social or events or whatever it is before that as well.
Absolutely. So I guess finally, I think one of the most kind of interesting aspects of your story has been how you kind of got into venture as well. And speaking of communities, I think one of the communities that you're involved in building is trying to build more female female sort of founders or people going into the VC space specifically. So if you could kind of share a little bit on.
Yeah, sure. I mean, for me, these kinds of initiatives are when we can identify a particular gap in the market. I spoke about the way Reinventure was involved in Stone and Chalk being seeded and Fintech Australia. I think we're getting to the point now in the ecosystem where there's some very specific challenges, and female founders is 100% one of the biggest issues in our ecosystem. There is, according to the Australia EY Fintech census, 83% of fintechs have all male founding teams at this point. This is last year's research. So there's 17% of fantastic female-led companies in the space, but we will have a diversity problem before too long if we're not looking at the bottom of the pipe. So an initiative that I thought would at least start to help that challenge is to raise awareness of the women who are leading these amazing companies. So on International Women's Day, we launched femalefintechfounders.com.au, which was really just to say there are 17% of the founded companies are women founded, and they're doing some great work. Here are their faces. Get them to speak at your conferences. Interview them for media. These are the businesses that they're building. That's a very small step, but one that I think can be quite powerful. Reinventure is not naturally an accelerator of businesses by and large, so we probably wouldn't be getting to that level, but I think we can do more of that upstream work. And also, I guess, women in VC is another big problem that we have, because I think it's just not naturally a career path that women coming out of, I think venture capital, interestingly, isn't a career path that people are considering naturally coming out of university. So there's a pipeline problem there as well. But at a senior level, there's obviously also challenges. Looking at how we can actually build capacity, again, downstream at the women who potentially are studying investment banking, management consulting, whatever it might be, and start to look at how venture capital could be a pathway for them to consider as well.
Yeah, absolutely. I interviewed Holly Liu from Kabam, and one of the things that we spoke about was, a big aspect of not enough women being founded was potentially just not having enough female VCs and people in a decision-making role to help back those companies.
I think that's part of it, but I think it's also just, the culture of mentorship probably is still a little bit skewed from men to men. And if there are some fantastic men in this ecosystem in the venture capital space, I think compared to what's been happening in a lot of the US firms and the level of sexual harassment, sexual discrimination going on there are some really standout VCs in Australia, and they are incredibly supportive. I mean, Danny and Simon, for me, have been they've been incredible mentors and incredibly supportive, especially, returning to work after having a baby. All of these kinds of things make a real difference at making sure it's a viable career path for women as well. Yeah,
absolutely. So, Lauren, thanks so much for coming on the show. For anyone that wants to find out more, say hello, get in touch, what's the best way for them to do that?
Lauren at reinventure.com.au, or I'm at Lauren J. Capelin on all socials.
Perfect. I'll make sure all of those links are in the show notes. Lauren, once again, thanks for coming on the show.
Thank you so much, Rohit.
Cheers.
Cheers.
Thanks for tuning in. If you enjoyed this episode, please don't forget to like, share, and subscribe. I'll be back shortly with another episode, but in the meantime, don't forget to check out some of our previous interviews. Thanks for watching.